So, you want to invest in property but you don't know where to get started? Well, here's my quick and dirty guide to getting started in investing in property. Let's get started. Hi, I'm Mike. Pleased you could join me. Do like and subscribe and you will be notified of any videos coming up. So why do I say that property is the best asset class? Here, I'll explain. The property market operates in cycles which lag behind the economy in general. Now in the long term the trend is usually up, so you will always invest in the long term. This is different from short-term trading where you can get caught out buying high and selling low. The second thing to remember is that we also want our property deals to make sense now, and they should be cash flow positive now, i.e. your rental income should exceed all expenses. Always track the markets. If you're prepared, you can buy when the markets crash, so you'll be doing the opposite of the masses. The next crucial rule when buying property: buy in a good solid area. First, draw a ring on the map, 1 hour's drive from where you live. This will be your territory. Now within this territory you're going to hunt for good areas. Translated, this means an average house with average people who live in it. Not too high end, not too scruffy. You then want to find properties in the area where there's value that you can add. This is a polite way of saying that perhaps the house needs a bit of work doing to it, or it's cheap compared to the surrounding area. Now how can you tell if you have a house that you can add value to? You go to rightmove.co.uk and then go to the house prices tab, and then just look at the previous sales, and you can then see what the average house price is for the type of property that you're looking for in your chosen area. Then you go hunting for deals. Location, location, location is the key. Are there any areas where there is more demand? Could be due to better schools, transport, shops, parks or facilities. Online property search. Your first point of call will be online property search. You can set up email alerts on the best websites where you stipulate the area, type and price of property you want. Then you get an email notification as soon as the property is listed for sale. Estate agents will also list the property online before the street sign goes up, so you get first dibs. Next, ask to be put on your local estate agent's list to be notified as soon as likely properties become available. Take care with estate agents and their websites. These are all priced above market value. Remember to check the real market value so you can put an appropriate offer of say 20% below market value. Then when you're out and about, keep an eye out for signs going up in your preferred location. Also, if you can always buy directly from the seller, bypass the agents and the competition. Now you may need to go door-to-door leafleting to see people who are willing to sell. You might obviously get many rejections with this method and you may have to develop a thick skin. However, out of every 10 offers you may get 1 acceptance. Before you buy a property, your due diligence should be planning for the worst case scenario with that property. Auctions are a great place to find bargains, but always view the property beforehand, because once that gavel drops, the property is yours. You should always be open to new deals, whether buying new properties or raising cash. For instance, if you're at a networking event or a social gathering and somebody asks what you do for a living, you could say, "Hi, I'm Mike, I'm a salesman, but I'm also a property investor as well." This could open up a conversation around property investment. And you could follow it up by saying, "Yeah, I'm always on the lookout for new properties to invest in." This could also work on Twitter, Facebook or other social platforms. You could have your own profile detail that you're into property investment. Always look for at least 20% discount on the market price. price, look to pay wholesale prices, not retail. This might mean that you're going through the estate agent. There's a saying, the bigger the brochure, the bigger the bullshit. If you do look at online portals like rightmove.co.uk, look for properties with just one picture on the outside. This is a guarantee that it will require improvements to be made of them, and so it's an opportunity for you to add value. Adverts. You could use adverts to find your sellers. You could put an advert in the local paper which reads something like, "I will buy your property for cost in 7 days. Contact," etc. If somebody rings, find out where the property is, work out the market value. Then offer them 25% below market value. If they say no, shake hands and walk away. Go to the next deal. If they say yeah, then you can go about raising capital. Buy for cash flow. Positive cash flow means that once you've rented out the property, you should make a profit after all expenses are paid. You should allow for void periods, say 10%. Therefore, you should only buy properties for cash flow. That means the deal has to make sense now, today, not in 6 months or a year. If it won't make money as soon as it's let out, don't do the deal. This is because you haven't got a crystal ball and you can't influence the property market. The price or the property after the deal isn't your business. If it goes up, great, that's a bonus. But it isn't your business. If the market goes down, that's okay too, as it means you can buy more property cheaply. Your business should be cash flow, and you can influence and control the income you generate from your property. This is your property business. Thanks for watching, hope you got value. Please do like and subscribe, and I'll see you in the next one.